Work Together 2-3 is available for you. And our directions for Work Together 2-3 read, T accounts are given below, and your instructor will guide you to the following example. Use the chart of accounts for Bergam Supply. We're going to learn about that fancy word, chart of accounts. We have cash, accounts receivable, Sam Erickson, supplies, prepaid insurance, accounts payable, Bale Supply, Kathy Bergam Capital. Now we have Kathy Bergam Drawing, and Kathy Bergam Drawing is going to be the account that we use for withdrawals. So investments will always go under Kathy Bergam Capital. Withdrawals are always going to be using the drawing account. Now, our account that we're going to use for revenue is going to be called sales. And all of our expenses are easy to identify because they always end with its classification. So we have two expense accounts that we can use for Work Together 2-3. The first one is advertising expense, and then we have rent expense. So we have transactions April 10th to the 20th, and right there on the bottom it says, prepare two T accounts for each transaction. On each T account, write the account title of one of the accounts affected by the transaction, and then write the debit or credit amount on each T account to show the transaction effect. Remember, you must have a debit and a credit. You cannot just have two debits or two credits. You have to have one of each. And if you do that, it will keep your accounting equation in balance. So the first transaction is April 10th, receive cash from sales, $600. The first thing that I always do is I always go through and ask what accounts are being affected. So, Clay, what two accounts are being affected? Close. Do you see how it says receive cash from sales? This is a new account, so we're not going to put it under capital. We're going to put it under what? What is the last word in that transaction? Sales. So we're actually going to use an account called sales now, Clay, okay? So this is going to be a new one, and sales is going to be our revenue. So we receive cash from sales. So our two accounts that we're using are cash and sales. Don't fill them in until we know which one is debited. Okay, so stick with me. I try to get you to think in the correct order. So which account should we want to work with first, Brooke? Cash or sales? Okay, what type of account is cash, Brooke? What is its normal balance? Debit. Do we have more cash or less cash, Brooke? So what does that mean we're doing to cash? Are we debiting or crediting it? Correct. So we just answered one big question. We just said that cash is being debited, which means I can list cash first. I do all of that before I type anything in. Because some of you got things wrong in application 2-2 because you had the right accounts, but you listed your credit account first, and Applio will mark it wrong, and I told you that yesterday. So cash is going to be debited for $600. Now, Clay, what was that other account you told me about? Sales. So I'm going to go ahead and put in my account title here. Now, this is the first time we've used sales as a T account, and sales is the account title. The classification of sales is revenue. Remember those four words I wrote on the board? Revenue had a plus next to it because it causes owner's equity to go up. So then I would go through and say, Caleb, what is the upside of owner's equity? Credit. Do we have more sales or less sales? More. So because you said the increase side is going to be on the right for credit, we are going to credit sales because sales is going up. So I'm going to go ahead and put $600 right here. Now the next thing we're going to do is we have transaction dated April 11th, sold services on account to Sam Erickson. Caitlin, you want to give me my accounts for that one? Accounts receivable, Sam Erickson, I agree wholeheartedly. Now the other one's a little tricky. Okay, so if we look here, we can see Sam Erickson here relates to this account up on the top. Would you agree those two things are very closely correlated? Has their name in it? So we have to look at the other part of our transaction. We have to analyze it. So we have on an account to Sam Erickson deals with accounts receivable Sam Erickson. So now we have to deal with these words that said sold services. What's another word for sold? Sales. Do you see that? It's just a different tense. Sold is past tense. Sales is kind of like your present tense. So the other account that we're going to be using with that one, Caitlin, is going to be sales. Okay. So which account do you want to analyze first? Sales or accounts receivable Sam Erickson, Caitlin? You pick one. It doesn't matter. Okay. So Caitlin, sales is one of the ways that we affect owner's equity. Okay. What was that main word that we used to classify it before? Those 4 that I had written on the side of the board? If you have your notes, you can look at it. All right. What did it do to owner's equity? Did it make it go up or down? I'm sorry, I just didn't hear you. It is up. Yes. You gotta say it with confidence. You're like, up. It is. It makes it go up. So, who wants to help Caitlin out on that word that we would use to associate it with? It's written like, yes, it is revenue. It's like written right here on the board. Revenue is the classification for sales. Okay? So, sales is a revenue account, and revenue makes owner's equity go up. What is the increase side of owner's equity? Credit, because it's on right side. So do we have more sales or less sales because we sold things on account to Sam Erickson? More. So sales is going to be increased as a credit. So that means that sales has to be the second account that we write, not the first. And by process of elimination, if sales is being credited, our other account must be debited. If you figure out one, the other one is the opposite. So then I'm going to go ahead and do my other account, cash. And then cash is going to be increased or debited by $850. April 14th, I'm going to pay cash for rent. Stevie, what 2 accounts do you think I'm going to use with that one? Awesome, awesome, awesome. Which one do you want to take a look at first, Stevie? Cash. Okay, so Stevie, if we paid cash for rent, do we have more cash or less cash? What is the less side of cash? Credit. So that means cash is going to be first or seconded? Second. So I'm going to put cash down here. Now, I need to take a little bit of time to explain expense. So rent expense I'm going to put here. Now, what happens with expenses? Expenses are always going to be increased. So when I look at the balance of an account, when my business first opens, my balance for rent expense is 0. Would you agree? Now, after my first month's rent, it's going to go up by $500. Now, my next month, it's going to go up by $500, so my balance is now $1,000. The next month, $1,500, $2,000, and it's going to keep going on for my entire fiscal year. Every month, I'm going to add to it. Would I ever take anything out of rent expense? No. So you're always going to find, if you can remember this, this will also help you. You will never, ever credit an expense. Once we get into their stuff, you might, but right now, in our simple, happy, basic accounting class, if you remember to always debit an expense, it will help you. Okay? Because we're going to keep track of it. Because then at the end of the year, I can go through and say, you know what? We spent $17,000 in expense for rent. I can make business decisions based on that number. And that's the whole point of accounting. Not just to track information so that way for our next fiscal period or next quarter, I can make different decisions based on where my money is going. So rent expense will be listed there, and I'm going to make sure that I debit it by $250. April 18th, I'm going to go ahead and receive cash on account from Sam Erickson. So basically, on the 11th, we sold on account, and on the 18th, Sam said, here you go, here's some money. I know, thanks, Sam. Logan, what two accounts do you think we're going to use here? Yes. Now, oftentimes, with the 11th and the 18th, people try to use sales for both of them, but you don't. You only use the sales account on the date that you perform that service. When we get money, it doesn't affect our revenue account at all, our sales account. All we're doing is affecting our cash and our accounts receivable. So we have cash and accounts receivable, Sam Erickson. Which account do you want to look at first here, Logan? Cash. We like cash. It's a simpler one. Okay, so Logan, because of this transaction, do I have more cash or less cash? I have more cash. What type of an account is cash? Nope, that's its normal balance. What is this classification? Asset. What is the normal balance of an asset? Debit. So I'm going to be debiting cash. So therefore, that one has to go first for $425, if I put my cursor in there. Then we have our next one. We have accounts receivable, Sam Erickson. Does Sam Erickson owe us more money or less money? He owes us less, so it's going to go down. Remember, for accounts receivable, we just go through and ask, do they owe us more money or less money? And the same thing for accounts payable. Now the 20th, paid cash to owner for personal use. Who wants to try that one? Brett does? Wow. And if he needs a friend, he's going to use Logan. So Brett, what are my two accounts?
Cash.
Look up here. Which one do you think it is? I would agree with cash. Now we have this right here, owner for personal use. So who is our owner? Kathy Burgum. So we have two accounts here, right? So we have Kathy Burgum Capital and we have Kathy Burgum Drawing. So capital is where we use for investments. Drawing is what we use for withdrawals. So it's going to be drawing. So anytime an owner takes something out of the business, we're always going to use the account of Kathy or the name of the owner and drawing. So know that. Withdrawals goes with the account ending with drawing. Which account do you want to take a look at first there, Brett? Cash or Kathy Burgum Drawing? Kathy Burgum Drawing. Okay. What is the classification of Kathy Burgum Drawing? This one's a hard one. Kind of, but wrong. It is owner's equity, but we needed to use one of those four words. So it's going to be a withdrawal. And what do withdrawals do to owner's equity? Up or down? What is the downside of owner's equity? What is the decrease side of owner's equity? Yes. So we are going to debit Kathy Burgum Drawing. We are always going to go through and continually add to our drawing account, just like I said, the expenses. We're not going to go through, if the owner puts something into the business, it's not going to go under drawing, it's going to go under our capital account. And then our other account that we're going to be using is going to be called cash, and cash is an asset, and an asset has a debit normal balance, so I'm crediting it because we have less cash from this transaction. Go ahead and rock and roll. Oop, what did I do on the 11th? Oh, I put cash instead of sales. I hope you didn't copy me. No, what am I doing? April 11th. Accounts receivable, Sam Erickson. That was my problem. Go ahead and try your on your own.